My name is Omar. I'm one of your podcast hosts, and I'm also a lawyer at Treadstone Law. For most Canadians looking to buy, sell, or refinance real estate in Ontario, a lawyer is the last thing on their mind. They're busy dealing with banks, mortgage brokers, realtors, and when everything is said and done, they look for a law firm to finalize the transaction. At this stage, if something is broken, it's hard to fix. And believe me, I'm a real estate lawyer, I've seen it all. How do you gain the right help early on in the process? Speaking to a lawyer one-on-one can get real expensive real quick, and it's probably not the best idea. That is why Treadstone Law has launched several resources for Canadians to have access to the information when they need it the most. You can sign up for one of our online workshops or to our email list to receive information you need when you need it. This information is designed for you to be better prepared and avoid costly mistakes, and for a limited time, it's free. Visit treadstonelaw.ca/MAS offer or click the link below. Welcome to another episode of Hustle and Grit. My name is Omar. I'm one of your hosts here. We have a very special guest today, a very exciting episode, one that I've been looking forward to. We have with us Greg Williamson, who is currently the Chief Revenue Officer at Lendesk. Greg has over 25 years of experience in the mortgage industry. He is a serial entrepreneur. He was a co-founder and Chief Revenue Officer at Blink Lending, which is now called Finmo. Greg has had quite the journey in the mortgage space, and I would really characterize him as a change maker in the industry. Welcome to the episode, Greg.
Oh, well, that's great. Thank you, Omar. That was quite kind. Thank you. I'm really excited for this too. Let's see if we can give something great for your listeners. I hope so.
Certainly, I don't doubt that we will. I think once people hear about your journey and what you've really done, I think in the mortgage space, for the brokers who don't know, I think you really have kind of shifted where the industry was going and where now it is going. And I really thought like what was exciting to me about this episode was just really getting the opportunity to hear it from you, kind of what led you to starting Finmo, going to Lendesk, and going through all that that entire journey. But let's start at the beginning. So,
Okay.
how did you get in the mortgage industry?
Oh, you know what? From college, I was in my fourth year university, and Royal Bank was recruiting on campus. And in 1992, when I graduated university, I mean, there was some tough times, not unlike what we're experiencing right now in terms of inflation and tough times for jobs, et cetera, et cetera. So, and yeah, it was a great job. I had just gotten married. I mean, not very many people. I do a lot of interesting, weird things, but I got married in my fourth year university. So I'm still married to the same woman. So that's something that was good, I guess. And yeah, I thought, hey, I got to get a job. And so I started with the Royal Bank, and I lasted a year and a bit, year and a half, I guess it was. And then I went and started first ever commissioned for me commission role. I went and worked for Investors Group, and I opened up their offices in Saskatchewan at the time, as I'm from Regina, and became a commission mortgage specialist. And at the time, funny story, I was like, I had a child at that time, little baby, and I went from you're on the management training program at a bank to going 100% commission. My dad didn't speak to me for a month. But my wife was the one who I don't know what I should do. What am I going to do? And my wife was the one who I could credit as the one who really started this journey, because she just said, you got to go do this, because, if it doesn't work out and you fall on your face, well, we'll just get back up and you'll go do something else again. So, having that belief from her was the catalyst. She's always been a rock for me. And so that's what got me going. And then I did well. I was the number one rep at Investors Group for 3 years running. In those days, listeners will have a fun time with this. I mean, in those days, I was doing $72,000 mortgages at 37 basis points commission.
Nice.
And so, yeah, I mean, my first year, right out of green. My first year I did something like 350 deals or something. So, it was great. It certainly it increased my income over what I was making at the bank. So my dad started talking to me again. But and then I spent about 3 years there, and I got the mortgage broker bug. It was interesting because in Saskatchewan at that time, so this is now 1996, 7, and there was no mortgage brokers didn't exist in Saskatchewan, but Investors Group head office is in Winnipeg, and Manitoba and Winnipeg had mortgage brokers. And in fact, my colleagues in Winnipeg were getting referrals from mortgage brokers. And I was like, oh, what the heck is this thing? And so me and a partner started the first ever mortgage brokerage in Saskatchewan in 1997. We grew that really quick and merged with a Century 21 real estate office in 2000. And then in 2003, we sold that to a credit union. So it was like really interesting because the other funny story of that was that I at the time I was a member of a golf club and I had young children. So I'm sure a lot of other people might understand that it wasn't super popular in my household that I was a member of a golf club when I got little kids running around at home. But my wife, once again, she knows everything. And she said, I ended up crafting the deal to buy that mortgage brokerage, and we ended up selling the real estate brokerage at the same time on the golf course. And so the credit union guys bought it, and that was we wanted to move to Calgary. My wife's family was in Calgary, and that was okay. Whew, we sold this business, did very well, and off to Alberta we go. And then at the time I was going to start another branch, if you will, of the company we had in Regina, but then all of a sudden we sold it. So I started a new brokerage in, I guess that would be 2003, and quickly moved that into the number one mortgage brokerage in the country. And we went back to back on the CMP Magazine Awards, or at that time, yeah, the Canadian Mortgage Awards, I guess. The inaugural was 2007 and 8, and we were Mortgage Broker of the Year, and I was also the following year the Mortgage Broker of the Year. And so we did that fairly quickly. And so I always had this ability to build something fast. But then 2008 hit, as you all may recall. The global financial crisis was not my finest entrepreneurial moment. I got very humbled. With a rising, quick, growth business, especially in Alberta, Calgary in particular, is a boom and bust economy. And so things were amazing for those 4 or 5 years prior to that. But then all of a sudden, I just got myself over leveraged, thought I was in a real estate developer, and sort of idle hands were the devil's workshop. I was involved in things that I ought not to have been because I didn't have the experience, but hey, I had all this cash. And I got whacked pretty good. And very humbled. And that was a change in the journey of my life. I went, as opposed to this, at that time, I think I had this, what I would characterize as an undisciplined pursuit of more stuff, more awards, more cash, more things. And it didn't serve me well. And so that was there was a couple of years of, searching and, doing some thinking about what I want to do. And I did a little bit of consulting and coaching in that period, but I was mostly working on me. I was working on myself and did a lot of retreats and a lot of time away. And came out of that with this vision of, I wanted to get into, something more exciting. And I didn't want to go back into a mortgage brokerage type business. I would do some mortgage deals myself, but I grew the coaching and consulting practice a little bit. But then I met my now business partner, and we started Finmo in 2017, actually 16 really. But I started working with him previous to that on another project, another few projects that didn't quite work out, but we just kept trying, just to think up an idea and work it and try, shoot, it didn't work. But fail fast, move on to the next thing. And then, yeah, we started Finmo, and that's taken me to here. So I know that was a long time, but I mean, I got 30 years to cover off. So here we are.
No, that's good. I was writing a few questions as you were talking too, because some
Okay,
things
great.
caught my attention as well. But so I guess the most recent thing. So you talked about how 2008 was a kind of a pivotal moment where you felt tons of success, sold one brokerage, started another one, growing very fast, became a real estate developer, and then you felt kind of this wall that you hit, and pursuit of more is something that you were kind of seeking, and then you felt you needed to nice. What do you feel has characterized your kind of has motivated you over the years since that change, right? So what motivates you now? If not the pursuit of more, what is the dream here, I guess?
Yeah, I'd said I'd characterize it an undisciplined pursuit of more, and now I would say I had, I spent as I said, I spent a lot of time in, silent retreats and meditative retreats, and just started trying to find that, because I was in a real shell shocked. I got very humbled, and so, okay, well, that the way I ran that, sort of what I used to call my, when I turned 40, I said that was the halftime of my life, like in, thinking about a football game. And it's like how I ran the first half. I mean, it wasn't very good. How am I gonna run the second half? How am I gonna come out of the dressing room and run the second half better? And I spent a lot of time thinking about that and a lot of vision. And I came up with more of like a disciplined pursuit of, I think what's important, or what I would characterize as meaningful, more of a why. And so now it's about my life, how I feel about myself, how I feel about the people around me, my family, and it's not about just fight and scratch and try to get more from somebody else. It's just I focus more on me and my journey and people around me.
Interesting. So when it comes to so you mentioned a few things too before. You were talking about how your wife was really instrumental in a lot of these kind of the journeys that you took. Would you say that you were naturally inclined towards taking that risk, or is it something that you were naturally inclined as well?
I very much so. I mean, I mean, with the work that I did on myself, I discovered that, and I think this is common for people. I discovered that drive that I had. I mean, I told you, I shared with you some of the successes that I had, which was certainly because I had this drive and this insatiable desire to succeed, and at all costs, and certainly at some levels, depending on how you want to measure, that would be successful. But what I learned about myself is that I was driven from this insecurity, this need that I need to be this so that people will love me, or I need to do this so that people will respect me. And it took a long time for me to learn that that's not the thing that I need to think about. What I need to think about is, how do I feel about me? And once I'm at peace, in my soul and everything that I do, then it doesn't matter. And that has been made it the journey much more peaceful than it was. And I've been able to come back on top of the mountain financially and otherwise. But this time it was a different journey, and much more peaceful. And you mentioned my wife again. I don't think I would have made it through that. I told you she was the catalyst that got me through into the first, let's go into commission entrepreneurship to run the business. She supported me all through that. But I mean, man, how many people do you know? I completely blew up the family fortune, and she she was just there. Like, I was a pretty broken person, and she was just there. I remember one time she said to me, "I don't care about all this stuff. I'll live in a box under a bridge as long as we're together and we have the kids." And I was like, what do I say to that? And it's been, so she was the rock that got me started and got me back onto the second phase. So, it's just been great.
Nice. I think um, it's something that you don't often hear. Like the shift that you were talking to first. I mean, I'm sure your wife's support helped you not just kind of succeed and, like you're saying, get over the kind of the hurdles that came along the way, but at the same time you were talking about how like kind of more and looking for something more meaningful. And those relationships are what kind of bring that meaning to life, right? And then you had her support to provide that. And I think personally, I've gone through a similar journey, and I think it's interesting how the dynamic where you're looking at kind of identifying yourself, or you're told to identify yourself through your external success. Whereas once you start kind of identifying or kind of defining yourself through your virtues, through your values, and how you treat people, then you start defining those things more too, right? So you start placing more emphasis there.
Yeah,
How do I?
I totally.
Yeah, right. So it's
Yeah, there was Wayne Dyer, who was an author that years ago, he's passed away now, but he had this really interesting thing about the phases of the life we go through. And so I think it's common for people, and some of your listeners will be there, I want to have a successful practice, or I want to have a successful business. I get it. That's great. You know what? Sure. Nothing wrong with that. And nothing wrong with having lots of money, or, that's okay. But if the reason I'm doing it is because I don't feel that I have the love or respect or something from somebody else, then I think it is potentially, could be heading for the wall. That's what I learned for me anyway. I think that if I'm doing it for the reasons of, I'm comfortable in my own skin and I'm happy and I feel good about myself, then great, you know, all the power to you and all the success to you.
and it leads to
I
more
think that you're just,
success.
yeah. And it's much, for me, it's just much more peaceful,
Mhm.
you know, uh, and it just, I'm able to just have a lot more harmony and balance in my life. And I like that, and I still have good success, however you want to judge that in terms of financially or otherwise.
Mhm. Yeah, I guess that's a good point. But what I was saying, it leads to more success in that you're not kind of you're not constant. You're evaluating things more objectively at that point, right? Because you're not looking at how the perception or these factors. It's the meaning behind that journey, right? So even if it's like how I characterize it is, as we were building our law firm, even if it's just figuring out how to do this with kind of excellence and perfection and making this better, that itself carries meaning. The revenue that comes with it is separate, but creating that kind of that client journey or whatever it is, it carries meaning, and that itself is enough to kind of pursue in that journey towards perfection. So.
I totally agree. Yeah, it's the way if people are wanting to build something. I was just having a conversation with a friend of mine actually this morning about this. It's like, I got to understand why I want to do something, and I got to understand where I'm going. And, for why is typically a people and bond, and the emotion that I'm trying to deliver is connection. And so if I have a why that is, and I include people, however that is for me, then I'm probably going to have a strong enough why to create the where, which is the vision. Where am I going? Where am I telling people we're going to jump on this bus and I want you to all come with me, but let me tell you where we're going. But I need to have a strong enough why to be able to create the where. And then once I have the where, then I create the what, which is what's the point? What am I trying to solve?
Mm-hmm.
What am I trying to do? And the emotion that I'm trying to get when I'm doing where is inspiration, excitement. The emotion I'm trying to get in what is clarity. And then at the last piece is how. Okay, well, now I know why I'm doing it, where I'm going, and what I'm doing. Now I just got to do the how, which is reverse engineer from the where. Like, this is where I'm going, so here's the plan, here's the framework, here's how I'm going to do it,
Mm-hmm.
and that's how I run my business.
So let's talk about all those for Finmo. So before
Sure.
we get to the whys and the wheres, and let's talk about the what right now at least. Okay, so what is Finmo for the viewers who don't know? Just in your words, what does Finmo provide or what services?
Yeah, so Finmo is a product now. It was a company that my co-founder and I created, but it's a point of sale mortgage origination platform. So it's a way for in mortgage brokers or credit unions are our customers, banks are our customers. I mean, anybody who's looking to create a digital mortgage process without having to spend the millions of dollars to do so, they can just license our software. It becomes white labeled. They use their own branding. And so, hey, a mom and pop mortgage, and look at my amazing technology that I have to back my mom and pop mortgage. And that's what we do. And then we also have a connection to, I think we now have 310 or so lenders that are connected to our network.
Oh, wow.
So as a mortgage broker, I can send deals. Once I've created the deal, I can then submit it to multiple lenders. Or if I'm an FI or a credit union or a bank, well, I can submit it to myself. Like, I have the connection to their system. So and yeah, well, and that's actually the Lendesk had that, the lender network. Finmo had the user experience and the borrower's journey. And so when Lendesk acquired us, it put those 1 + 1 = 3. Like,
Mhm.
take the take the beautiful digital front end and connect it to this lender market so that we can monetize it, because it's the only way you make money in this business. And that's why we got acquired by Lendesk in October of 2020.
Okay. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer to your signing appointment, everything is done from the comfort of your own home. No need to take time off to visit a lawyer's office for your signing, when you can complete everything from your living room table. The best part is you don't have to pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us today. Enjoy the podcast. Okay, so
And
let's
yeah,
step back first. So let's go to the beginning. So you mentioned you and your co-founder started Finmo, or as I understand, it was Blink Mortgage in the beginning.
it started out, yeah. Because of my mortgage background, he was my partner. I found this a funny story. I found him online,
Oh, nice.
of all places. He's from the United States, and
On Reddit or
he's no, it was there used to be a product called lead pages, I think. Anyway, I was looking for some marketing help on my mortgage practice, um, and he created this thing inside there. They had a marketplace in this company, and he created something. I just cold called him. I reached out and said, "Hey, it's really interesting what you did here. Like, are you interested in talking to about what I'm trying to do?" And he was being a marketer, and so he was like, "Yeah, sure." A guy in Canada, okay, that's weird. Like, at the time, he was living in Atlanta, and at the time he was 23, 24 years old. So it was like taking a shot on a kid that hadn't yet proved himself at the time. But there was just something special about him, and so we worked together. He originally started with me to help me grow leads into my mortgage practice at the time, and then we rebranded that to Blink Mortgage, and he was a part of that. But then while we were doing that, he discovered, man, I'm creating all these leads, and then there's this drop off, which is really interesting because this would have been 2015, maybe, so 7 years ago. And even then, you'd be like, we were generating online leads, and then they would drop off when they had to try to create an application or try to create, because at that time there was nothing. There's nothing for a digital way to get your application into a system. And so you were taking applications over the phone or sending them paper applications or whatever you could do, and it's clunky. And so anyway, he said he had this epiphany, kind of a Jerry Maguire moment, and wrote, like, we need to create a platform. At the time, remember, he came from the U.S. Funny story. We were inspired by Rocket Mortgage. At that time, we're just coming out. Push button, get mortgage. They were the pioneers in the digital mortgage space. And that's what was our inspiration, which is hilarious because Rocket Mortgage owns Lendesk, and Lendesk is the one who acquired us, 7 years later, once we got that
so
inspiration.
you did
So
the job right? Yeah.
yeah, I mean, that's what we were like, hey, why don't we just do that? Like, it's working for them. Let's do that in Canada. And I had the experience and the knowledge and connections in the Canadian mortgage space to understand that, yeah, the current incumbent, which had 99% market share, was, ripe for disruption. And so I'm like, cool, if we can figure out how to build that, I know there's opportunity in this. Let's go, let's do it. So we raised some capital, and off we went.
So what was so you're saying you were modeling your business on the Rocket Mortgage's model. So was that kind of the vision, creating something that's like, what is their thing, Click Mortgage, or was that your vision, or was there something else that you felt was unique to the Canadian market as well? Um, what was the goal here?
Uh, no, I mean, to be honest, when I think back on it, it's a good lesson for entrepreneurs to not pivot too fast. Obviously, pivoting is important and interesting, but we ended up creating something that was going to be really difficult to generate revenue. So it's like, oops. And had we pivoted, we originally built something for ourselves. At the time, it was going to be Blink Mortgage, but then kind of was like, man, the other mortgage professionals are probably be interested in using this. And we were right because it was so good. It was just a really modern, fresh technology. Think about the time when we went from, I could have to hail a taxi to when we got Uber. We just were like, whoa. Well, that's kind of how I think a mortgage broker felt when they first got look at Finmo, because it was like I had to do this weird, totally inefficient manual way to, wow, all of a sudden it's all automated and digital. But we couldn't figure out how to make money because mortgage brokers at the time, sure, you could pay a little bit of a SaaS fee, but that wasn't going to be it. And in the model in our businesses, it's like a toll booth. So, we get a clip from the lenders for every deal that a mortgage professional sends through our pipes. So it's a pipeline toll business, but we didn't have any lenders. How we couldn't connect the lenders. So we ended up building something that we had to get acquired, which we realized that was okay because we created a bit of a bidding war, and had two people wanted to acquire us when the time was right, and we picked Lendesk, and it's been the best decision we made.
Oh, why Lendesk? What about them? I guess did you guys?
There's two reasons. One was because they were backed by Rocket Mortgage, who was our original inspiration. So we're like, feels like this is destiny. And the other reason is the people at Lendesk, the people we were negotiating with, the people that we were, the leaders at Lendesk at the time we just clicked. When you're doing an acquisition, and this was summer of 2020, full lockdowns, full restrictions, can't meet anybody. We're doing everything over the phone and video conference. Never met them. Weirdest deal I've ever done, where I didn't meet the people that I didn't meet those. We closed on our acquisition and we didn't meet them again for another year.
Oh, wow. Did you join
Yeah.
away as CRO, or was that like after the?
I did. Yeah.
Also,
Yep. Both my partner and I. So my partner's Carter Zimmerman, and he's now the president of Lendesk. And we both went with the deal. In fact, all of our Finmo team went with the deal, and still all work at Lendesk.
nice. So when it comes to Finmo itself, so you mentioned that you guys had the user experience, you had the brokers, Lendesk had the lender network, so that kind of helped you connect. At that juncture where you thought, okay, we have this great product, we have a great user experience, but we don't have the connection to the lenders to monetize this. Was your thought, okay, we have to get acquired, or were you thinking of, okay, maybe these are the different ways we can take this? What was in your mind at that stage?
We tried to go get a few lenders, but it was a bit of futility. We didn't have the capital to really do what needed to be done. And so fortunately for us, Lendesk and another came knocking right at the ideal time. I mean, literally, it was just good fortune. We were faced with, man, we're gonna have to go do another capital raise, and pretty scary times because we're gonna have to raise a lot of money and then try to get all these lender connections where, lenders weren't falling over themselves to try to connect to a new system. So yeah, it was pretty scary times. And then both these companies came calling right at the right time. So we were like, okay, let's do this.
Nice.
Now it feels right.
Nice. So Finmo itself, what would you say is your biggest competitive advantage across, if there's any other competitors out there? What sets Finmo apart? What is Finmo?
Well, in the mortgage broker space, I think it's easy and obvious. It's that we really like Switzerland. So in the mortgage broker space, there is competing technologies. One is a very old, sort of the incumbent in the space, has some challenges with innovation and, bringing out something new to keep up with some of the new platforms that have come along with features. But the other platforms that are available in the space are owned by mortgage networks. So DLC and M3 each own their own platform. So it us being Switzerland, where we're not owned by a particular mortgage broker platform, I think should be more of an advantage than I think mortgage brokers, um, I think, realize. And also, it's just, objectively, I think it's the clear, you know, winner in terms of features. We don't, most of our competitors were building a mortgage broker tool. And we built a borrower engagement journey. So we focus on the borrower. And so as a mortgage professional, I have certain jobs that I need to be done. I get it. But there's others that are doing that job better. I don't need to recreate Gmail. I don't need to recreate Google Calendar. I don't need to recreate like CRM, Zohos, or Salesforce. Like, why would I do that? There's already great tools that do that better than we ever could do. And so we just focus on the one thing that we can do really well, which is create the best borrower engagement and the highest amount of efficiency to get that loan approved. That's what we focus on. So we don't have a lot of bells and whistles and a lot of other things in it, which I think people like. It makes it easier to adopt and easier to learn and easier to use. And in the FI space, it helps us with that too. Like if I'm a bank, for example, there's no way I want to buy a front end POS system that has all this extra stuff that was built for mortgage brokers, because I'm a bank. I have all those things already. I just need this one thing to do this one thing really well. And that's been successful for us.
And I think really anyone who is kind of in the mortgage space would probably agree that the client journey is where the biggest gap was too, right? It's where like the people had the biggest headache, and that experience had the biggest opportunity that you guys really changed the game and fixed. But when let's talk about the industry, where that's gone, and like where the
Yeah,
journey has
yeah.
been. So
Great segue. Yeah.
so what was the mortgage industry like when you first got started? So how different was it from how it is today?
I was just having this conversation with a colleague of mine a couple of days ago, and let's see, you don't even have to go that far back. I mean, literally 7 years ish, 10 years max ago, you know, like I said, there was an incumbent platform that was done a great job. We were way ahead of its time in the late 90s, early 2000s, like connecting all these lenders so a mortgage broker could send a deal to. Mind blowing, amazing, and good. But then 15 years of no additional innovation or anything brought about. So, okay, fine, is what it is. Why not? We had 100% market share. We just count the cash. I get it. So, but that you're ripe for disruption. And so, anyway, um, what I think was interesting when you say the past, so the recent past, it wasn't that long ago where, as a mortgage broker or professional, one of the newest where the puck is going, or what's coming, is like this idea that consumers would shop online. That was the thing that was like new and revolutionary. Prior to that, it was they didn't shop online. People just didn't go to the internet to look for mortgages. They went to their bank and they went to whoever their friends or realtors referred them to, which still happens. But there was this like, oh man, this is where the puck is going. Like, people are going to start to go online. So it became this, how am I going to be online and generate leads? And actually, that was the original emphasis of Blink Mortgage. And we wanted to go online in Canada with Blink Mortgage. Our original idea was, and do it on technology and process and service, but not low rate. And it failed. It failed in a sense that maybe we didn't have enough capital to try to keep it going, but we didn't even want to try to put more good money after bad. What we realized is at that time, and maybe it's changing, I don't think so, but at that time it was, if I'm going to go online as a consumer and deal with a brand that I don't know and or people that I don't have a human connection with, then I better have something else, which is going to be a cheap rate. And so, and what we discovered is people would then go online, get the cheap rate, go back to their bank, because that's the people I trust and that's the brand I know. And if the bank could match that rate, I'm going to go with them. So we struggled. And certainly other digital mortgage brokerages got through that and are doing great. So it could be as much about our execution and capital as well. I'm sure that's a factor. But anyway, so there was this idea that that's what I need to do. And so now here we go, fast forward to today, the present day. I think things, the pandemic was a clear press the nuclear button on this. I thought, even a couple of years ago, I could see this is where I think we're going. And that's why we started Finmo. Um, but the pandemic moved that fast in a sense that I need to have a digital mortgage process to be able to acquire customers. Online, old school, traditional referral didn't matter. I need to have a digital mortgage process. And not for the obvious reason that everybody would say is, well, meet customers where they are. Customers can order pad thai and have it sitting on my front step in 45 minutes. Like we couldn't do that not that long ago. Or even to these days, it's blowing my mind. I live in Calgary, so we have these huge Amazon warehouses. There's stuff I order on Amazon. Literally, I get it like 6 hours later. And so that's, so certainly consumers are saying, I want to be online. I want a smooth experience. And there's mortgage professionals still out there today that are like, no, 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 no. If I call my customer and put them on the phone for 45 minutes to tell them everything they need to know about picking me and get their application, that's a better way. I disagree, or it's not going to be, because people don't want that. In today's world, I can barely keep somebody's attention for 10 or 15 minutes because they're going to see something on Instagram and be gone. So I think I need to be more efficient. And so that's the obvious reason is meet clients where they are. But here's the better one. Here's the other one where I think the things are moving. So going into the future, if I'm a mortgage professional today and I continue to resist this, I resist things mostly because I'm afraid, or I'm overwhelmed, or I'm unclear. So I get that, I understand that, but there's people out there to help you. But I think that if I continue to resist the idea that I need to make my business digital and process, know this: even in the last 2 years, the amount of successful digital mortgage brokerages that have popped up has more than doubled. And some of these are raising crazy amounts of capital. I mean, there's a story last week, Pine Mortgage, a couple of young guys raised $27 million on an idea. And, they're gonna create something, and they come from Blend, so they're probably going to create something great. And there's a bunch of others. Nesto just raised like a year ago or something, raised a crazy amount of money, and they're creating something great. And so these companies are going to create a digital process. They're going to create that Uber, Airbnb, that smooth, nice process that consumers will love. And that's 2 years from now, there's going to be double or more again of those companies that are going to do that. And so I, as a local traditional mortgage broker, I'm going to have to compete with that. And then add this, as much as 2 to 5 years ago, the big banks in this country were, attempting to try to create a digital process. Most failed. I think they would, they would think that, but that's okay. Fail fast, do it again. They have a lot of money, and they have a lot of people. And I happen to know inside knowledge that banks are coming very shortly back in and with a new way, a retooled. Imagine getting a completely digital process that's auto approved, and you have your mortgage and you're done inside of like snap of a finger. And so now again, consumers might be, I don't know this brand, although if it's a big bank, they do, but certainly those other digital mortgage brokerages will, they'll struggle because I don't have a brand and I don't have that personal connection. So as a traditional mortgage broker, this doesn't mean I'm painting this picture that you're dead. Not at all. I actually think that you always will have one or two advantages that you always will have: advisory, like detailed advisory, and personal touch. Those are things that the others cannot, or are seemingly not being able to do. And so if I have that, great, embrace that. But if that's all I have, and then I meet you, Omar, for a mortgage, and you connect well with me, and you're like, oh, this is great. He's a really good guy. I really enjoy this, and I like his advice, and so I'm going to do this. And then I tell you that we're going to go through this janky, clunky process that you're going to become frustrated with, and you're going to become tired, and you're going to, somewhere in that journey, you're going to say, I'm just going to go back to my bank, or I'm going to go to this new whiz-bang mortgage brokerage because they're actually going to give me a better rate, and it was smooth and easy. So as a traditional mortgage broker, I'm going to lose. So those people who are continuing, and I know it sounds self-serving because I run a technology company that has a platform that they ought to use, but I don't care whether you use my platform or anybody else's. But if you choose not to take a digital mortgage step in the next 2 years, I think you're going to have some considerable headwinds in your business.
The right step, the right digital mortgage step, i.e. Finmo. At
Yeah,
least.
whatever's right for you. It doesn't have to be. Certainly, we'd love to have you at Finmo, but I mean, it doesn't matter. You know, pick another one. I don't care. But I'm just the advice is generally for mortgage professionals is you. There's no more time.
Mhm.
The time is now to make that decision. It no longer, you know, and they tell my, again, I used to tell people when people make excuses, when I make excuses, it's the lies I tell myself in order for me to get the excuse so that I don't have to do the work that I know I need to do in order to get what I say I want. And so stop telling myself lies. That's the thing I do to myself. You know, I write in my journal, I say, stop telling myself lies. Just do the work, make the decision. There's all kinds of companies that are there to help me. If I was a new mortgage professional or even even a grizzled veteran, I can still find people that can connect my CRM, can give me a digital mortgage, can put it on my website, and can get me, connect to so I can send text messages and do everything and really up my game in a digital mortgage process. I can do that inside of a week with companies that are out there, including ours.
And I think one thing that you touched upon is really important as well. You were saying how if the mortgage brokers focus on their personal touch and advisory, that's where their kind of competitive advantage really is, competing against these big Goliaths coming in. And I wanted to touch upon that a little bit more, just because it's something that even at our firm that we've kind of explored how the industry, the mortgage industry, even though we're not a mortgage brokerage, we are not even in the mortgage space. We're real estate lawyers, but we kind of follow along the innovation. We've seen Finmo grow, and we're very kind of bullish on Finmo. I think Finmo is the future of the mortgage space, and I'll tell you why as well. Why I think that's the case. So you said how personal touch and advisory. I think the way I see it, I break apart the mortgage business, the process into three different categories that are barriers, where you can tell me if you think this is right or wrong, and where you think kind of other opportunities are. You have the sales and marketing competencies, and then you have that client experience, and then you have the fulfillment, right? So how do you handle that volume when it comes in? How do you bring in that volume? And how do you make sure that the client has such a good experience that they're going around telling everyone, oh, these guys are great, you should hire them? And where the biggest push when an industry evolves, or it goes through kind of a shift, is the first two categories first, right? So you bring in the volume, create a good experience, then you scramble for fulfillment, right? Which is still there, right? So personal touch and advisory really focus on sales, right? It's how you're bringing in that client. It's how you're marketing your business. It's how you're getting that business in. But you need someone like Finmo that takes the client on that journey, just guides them through that process, so they just have a pleasant experience, and they go out and they say, hey, look, use Joe, use whoever, you should be using this company instead of Nestor or whoever it is.
Exactly.
Right? So
Yeah, exactly. I mean, I think that you're right. Like, as part of what we obsess about two things at Finmo. I've been really talking about the borrower engagement and borrower journey, but we also obsess on mortgage broker efficiency.
okay.
How can we automate some of your tasks? How can we do things that will make your job simpler so that you can create a great experience? It's still sort of keeping the borrower at the centric center of our philosophy. But that said, yeah, in terms of advice, if it will, for people that might be listening, that when in touching on what you said about sales and marketing, one thing I think that is also changing and is something to be mindful of as we move forward is that it depends on how long you've been in the mortgage career, you've had to adapt, but here's the new adaptation, I guess, is that I think you should expect that your customers will be shopping more because it's easy for them to shop. Not that long ago, it wasn't easy for them to shop. What would they do? Go online and see some crazy rate from a site that they don't know about? I don't feel that. I don't feel it. Or like have to drive to their bank, or call somebody. Like, it wasn't that easy, but now it's becoming very easy for them to shop and very easy for them to do 10 minutes worth of work to give a little bit of invite and get an offer, maybe a pre-approval and everything all in 10 minutes. So as a mortgage professional, I ought to get off this. Man, it's so funny to me. I see online stuff, although I don't spend a lot of time on social media these days. But when I did, people would tell me, I'd say, people would be complaining, mortgage professionals complaining. I was, oh my God, I can't believe what this customer did to me. I did all this work and then they left me and went to their bank. Poor me, the victim. And I'm like, what? No, it's not. If the customer left, it's my fault. I did something that I ought to have done better. Or else if I blame them, I can't change anything that they did. So now I can't change anything in my business. So I gotta blame myself. And so this idea that people, at that time was like, it was tragedy that somebody shopped. I mean, what are you talking about? Of course they're shocked. Like, and so mortgage professionals, I think, are getting a rude awakening that I just need to embrace the idea that they will shop. I should start every mortgage application and or conversation with a customer that says with a mindset that they're shopping. I'll give you like what I've done in my mortgage practice. I still have a small team that works on some of it. Is I have a thing called the shopping around form. I'm already, Omar, you come to me and I'm like, hey man, you're probably going to shop. That makes sense. But here's what we're going to do for you. And by the way, I'm going to give you a form with 4 questions to help you shop. So you help shop smart. And then I give them the questions they ought to ask the other party. Now, they're designed in such a way that I think the other party may struggle to answer the questions, which makes them look maybe a tiny bit incompetent. I don't know. But at least from a borrower's perspective, now the risk falls down, the barriers fall down because they're like, okay, well, he's helping me actually shop. And then the other side that we do is we give options. So as a mortgage broker, I have all these options of lenders. Why in 2022 are mortgage brokers still only giving customers, hey, Omar, great news, I got you approved and here's your offer. One choice, one offer. You as the consumer are going, well, hang on a second. I thought I went to a mortgage broker because I was going to be able to see the best options. Oh, don't worry, that this is the best one. Trust me, I looked around. Well, I don't know if I trust you. I just met you 20 minutes ago. So I want to show customers there. So I was like, first, I'm going to teach you how to shop if you want to, but all the way. Oh, by the way, you bank with TD? No problem. I have TD too. I'll add them to our lender comparison report that I'm going to share with you. That's how you can get customers. It's advisory. It's like personal touch. It's keep it moving. Keep it so that they don't get distracted. Keep it so they don't get frustrated. If they're frustrated or, don't understand, disoriented, don't understand what's next in the process, they're gone because there's too many options that are available to them.
Which leads to the next question too. So what about if, so you were saying, I guess before I moved there, so how long ago did you start this comparison shopping, like kind of process? And have you found it to be useful? Like, what is your thought?
I've been doing it in my mortgage practice for, probably 20 years, maybe more. I used to do it with Excel spreadsheets. Then we actually built, Carter and I built a product to do that in our mortgage practice. And then that evolved into when we joined Lendesk. Lendesk has another product that's amazing. It's called Lender Spotlight, which gives the mortgage professionals quick access to every lender policy and every lender rate in the marketplace. But included in that is an ability for you to create a PDF that has comparisons between lenders. I can literally do that in 1 to 2 minutes. But it appears that I did this exhaustive research in the marketplace. And then when I'm sitting down with my customer, I'm going to say, hey, Omar, here's the 5 choices that I think are the best for you. And let's walk through each one. And let me tell you what I think this one's better than that one. And all the while you're like, okay, my rate is 409. And you're like, man, geez, my bank gave me 399. So, and then you're like, but I'm going to tell you why your bank's offer is probably not that good for you, given the way they calculate penalties, for example. So let's talk about that. And then you end up taking a 409 rate with me with a lender that has more flexibility, better options, and I don't have to cut commission. I don't have to drop my rate because I'm giving you advice and I'm selling you and I'm giving you an experience that you value. And if you value it, you're prepared to pay more for it.
Makes sense. So I had a list of questions I wanted to go over about advice for brokers, but I think we're running a little bit short on time. So I'm just going to pick like 1 or 2 of like the more important, I think more pertinent questions. So on one area I wanted to talk about different advice for, let's say, someone starting their career as a mortgage broker, different advice for someone, let's say, who's in their kind of at the $10 million mark, maybe wants to push to the next level. And then there's the last category, someone that's maybe 20 to 50 million. What do all 3 of these categories need to know? Other than what you said, you've already gave a lot of good advice, but what do you think is something that people should be considering in their mortgage journey?
Sure. Other than every single one of you choose to get started digital mortgage practice, build that. If I'm new in the business, great, I get to start from scratch. But if I'm newer in the business, this is going to be advice. I've been consistent with it, even when I was coaching and consulting, and I've been doing it for 30 years and helping when I own brokerages and helping my own agents succeed. It was the same advice, been the same for the last 30 years with somebody who's new in the business. Is the first place that I ought to be building the foundation of my mortgage practice is with realtors. Most of your, there's going to be listeners now that their mortgage broker owners tell them something different, or somebody, their other mortgage veterans in their office say, oh, I hate realtors. Hey, there's no question. Realtors are difficult to deal with at times, but every single day, 365 days a year, there are deals in that building over there. And so that's where I ought to go, because I just have to present a great case. I got to present the realtor why they should work with me. And I used to think I build my realtor team much like I would build a hockey team. I'm not a big hockey fan, so I got my stars, I got my front line, I got defense, I'm building a team of realtors who support my business, and so that's what I would do. If I was middle of the road, sort of gaining some success but want more, I likely have done that because I did some realtor business, or otherwise I've got a foundation. And so then I might consider other platforms, other advisories like accountants and financial advisors, and I certainly work with my existing client base to get referrals. And then if I'm a larger operation, I start thinking about big deals, like going and doing employee benefit type mortgages for big companies. Hey, you, Mr. Big Company with 200 employees, I can provide a really interesting service with me and my realtor buddy to help you buy, your employees get discounts on buying homes. For example, there's an example. I got to do bigger deals to scale and grow the business. And those are just, I have others, but those are the quick off the top, I think, for those 2-3 cohorts.
Very wise words to end off the podcast. I really appreciate you coming on with us. I think this was a very helpful session, and hopefully certainly our mortgage broker viewers will benefit from your insight. I appreciate you coming on.
One more tip for your audience.
Yep.
Go buy is a book that changed, one of the books that changed my life is a book called Untethered Soul by Michael Singer. Just go read it. It's a quick read. Can do it in a few days, but it starts you on a journey. He's got a few other books, The Surrender Experiment, and a few other things that was right at that time. I told you I was reinventing myself and thinking as I read that book, and I've recommended it many other times to other friends and family, and it's been very impactful for people. So there you go. Last tip.
We'll have a link in the bio as well with the book. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer to your signing appointment, everything is done from the comfort of your own home. No need to take time off to visit a lawyer's office for your signing, when you can complete everything from your living room table. The best part is you don't have to pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us today.